The day Wipro reported earnings, and after markets shut shop, fortunately, the numbers disappointed rather seriously, and margins and guidance were below expectation. Dollar revenues marginally higher than estimates. That was perhaps just a saving grace. Reema Tendulkar does the number crunching best for us. Reema.
Yes, overall disappointing for Wipro because even as the company delivered well on the revenues, their margins as well as the Q2 guidance missed expectations. So first on the top line, dollar revenue growth of 2.6%, higher than what Infosys had delivered. Constant currency revenue growth of 2% in line with between the company's guided band of 1 to 3%. But remember, this was aided by the 2-month integration of the Health Plan Services acquisition. Margins fell by more than 200 basis points, lower on account of a 1-month impact of wage hike. Secondly, because the acquisitions were margin dilutive. Thirdly, the management alluded to lower profitability in their India and Middle East business. And remember, the second quarter margins too will be impacted because of a 2-month wage hike. But the biggest miss is coming in the Q2 guidance, which stands at only 0 to 1%, which means the constant currency revenue growth in the second quarter in Q2 will at best be 1%, and this is much lower than the Q2 growth that the companies delivered in the past. If you remember, Q2 FY16 as well as Q2 FY15 had a constant currency growth of about 3 and 3.1%. Some concerns, the top line continues to degrow, fallen by 5% this quarter, was down 13% in the prior quarter. Brexit, 11% of the revenues are pound denominated, and the management said that Brexit can impact decision making in the medium term. Attrition has gone up by 300 basis points quarter on quarter. And fourthly, energy, that's a vertical which contributes close to about 14% to the company's overall revenues. That's fallen for 7 straight quarters now, falling by 2.7% in this quarter. And fifth, India and Middle East saw a decline of 2.5% in revenues. And over there, the management indicated that there are some headwinds. So these are a couple of the issues that we have with Wipro. What can support the stock is that it's already fallen after Infi and TCS disappointed the street. So from those levels, it's fallen 5 to 6%. And second, it has some valuation support because it is trading at a significant discount to peers. But net-net, disappointing earnings from Wipro.